All right, welcome to the October monthly update. Landon McKernan and Mark Cassell. We're here to talk about a few items today, obviously that are pretty prevalent in today's market. One thing that Landon and I have actually been talking with a lot of our clients, other brokers, and other people even outside of the real estate industry, oddly enough, is something called seller financing. If you're not familiar with it, it is pretty interesting and also a good alternative. But Landon, what's kind of your thoughts on seller financing and I guess how to structure that deal?
I don't know about you, but obviously we're starting to see more interest in seller financing, both from buyers and sellers. A couple of the reasons that we're seeing that is banks are a lot stricter on their requirements right now. They're oftentimes requiring 40 to 50% down on the loans, as well as looking for higher debt service coverage ratios. And so a lot of ways buyers are able to avoid that is they can negotiate either a lower down payment with the seller or a better interest rate. In addition, you're able to get the process done a lot quicker than you could through a bank that might require 45 or days or even longer. Some of the benefits for a seller is you're able to defer some of the capital gains taxes. Traditionally, sellers would look to do a 1031 exchange, which they still are, but there's a lot less inventory on the market, so there are options out there just aren't as exciting as they once were. And so this provides an alternative strategy which would allow them to keep some of their money invested and collect a passive return moving forward. And we already touched on it, but obviously they can oftentimes get a lower interest rate than they could from a bank. And for example, we have a deal over on Hohokam Drive in Tempe, where it's 4 suites in total. It could appeal both to an investor and a user. And we had it out on the market for probably 60 days. We were getting some interest in it until we started offering seller financing at an attractive interest rate. We actually had it offered at 5.5%, which is
huge.
Probably 200 basis points lower than someone could get from a bank. And at that point, we were getting a lot of interest, a lot of tours and offers as well, and now it's under contract. So pretty cool to see how big of a difference seller financing can make for a deal.
Huge benefits for the buyer and the seller, especially at an interesting point in the market right now. So if you guys have any questions on how to structure that deal, feel free to reach out to Landon or myself. We're pretty well versed in that, and we've got a lot of experience in seller financing as well. Next thing we did want to cover is what's the state of Phoenix industrial and the market in general for what we're seeing. One thing that I've noticed, if you look at the broad spectrum of statistics, the vacancy rate is at 7.61%, which I think is about where we were right around COVID. And if you look at that as a broad scale, that might be a little bit concerning. But if you look at individual submarkets, it's going to be a lot lower on the individual vacancy rates. So there's a lot of new construction coming down the pipe. I don't know if you wanted to talk about that with what's being developed right now, as well as how much of that is in regards to our total supply. So.
Yeah, I think you made a great point there. When we're driving around on a day-to-day basis, we're not seeing a lot of vacancies. And that reason's because a lot of the buildings we're working on are in central locations. They're older buildings. They were built in early 80s and all the way up to the early 2000s for the most part. And so when we're seeing that stat of 7.61%, that's really factoring in a lot of the big box, buildings that add to the total square footage, buildings that are 400,000 to 500,000 square feet. That's really going to make a dent in the vacancy rate.
Yeah, it's super interesting. Just some more stats for you guys. So absorption is actually down to 13 million square feet, and roughly 29 million square feet is currently being leased out. There's about 2/3 of space that's under construction that is actually still unleased, which is, I would say, fascinating. Definitely something to watch out for on the big box industrial front. There's a lot of that being developed over by Mesa Gateway, along the 303 corridor, along the 10, out in Tullison, Goodyear, etc. That's actually about 10% of our current supply that's actually under construction. So about 46 million square feet. Pretty big.
Yeah. So did want to ask you about that.
Yeah.
What do you think is going to happen when all this product finally hits the market? Is that going to affect lease rates? How are landlords and developers going to go about getting this space leased up?
I think it's a conversation that we have a lot with a lot of investors and user buyers. So there's a lot of supply coming out to the market for this big box product. So that is going to be really interesting when you have to compete with pricing. Obviously, when they have floating rate debt, that's going to be interesting if you're a developer. So that is something to watch out for. There might be some more, I would say, better price deals coming down the pipe in the next 12 to 18 months. So that's something that we're looking out for. Even though we do have a lot coming online, Phoenix is still a hub for third-party logistics. Something I did want to highlight was Saddle Creek Logistics took down about 570,000 square feet in Glendale. Safe Flight Auto Glass and also PGW Auto Glass took down about 130,000 square feet plus on both their facilities. So there's still a lot of traction in those bigger deals right now. And it's interesting that Phoenix is kind of a hub for these auto tenants as well. But I guess going back to what you were asking with the supply, I think there's going to be a lot coming out that, there's going to be a lot to pick from, to be honest.
Yeah, no, you make a good point. And one of the things to consider is obviously a lot of companies are still coming here, right?
Yeah.
So even though we have a lot coming to the market, there's a lot of companies that have Phoenix on their radar. They've thought about expanding here or moving their operation entirely. So I think even though we have so much coming to the market, it's still going to be absorbed fairly quickly.
Yeah, that's super interesting on the logistics front. Another thing that I did want to touch on is Phoenix is still a huge hub for manufacturing right now, and the big two that we're really seeing kind of paving the way is TSMC up by Anthem on the I-17, or along the I-17, if you will, in the 303 corridor. And also you've got Intel building their multi-billion-dollar facilities as well. So that facility in the north, as well as Intel's facility in Casa Grande, is going to be super interesting. Obviously that's geared towards chip making and manufacturing. So Phoenix is definitely going to be a national leader when it comes to manufacturing those kinds of products, which is really cool. So
I agree. Let's talk about cap rates for a second.
Yeah.
Obviously, we get emails and updates from different title companies monthly showing our transactions. And what I've seen is transactions from 2023 year to date versus 2022 year to date this time. They're down about 60% overall.
Yeah.
So that tells me that buyers are having a hard time underwriting the current deals that are out there. And cap rates right now are averaging about 6.28%, up from 5.96% just a year ago.
Yeah.
To me, that doesn't seem like a massive increase considering where interest rates have gone. Why do you think that is?
I think it has to do with the current supply that's out there. There's not that much of it, so groups are willing to get aggressive on pricing, and they're willing to either wait out a tenant that's got a below market lease and have it roll, and then either get a tenant that will pay a higher rent, or increasing the current tenant's rent to get the return to something that's going to be more in line with realistic expectations based on where you can get debt, which would be in that 7 to 8% return right now. So
yeah, I agree. And obviously if you're a seller too, you're looking at some of those broker opinion of values that you got a year or two ago, and some of the comps that you saw come across, and you don't want to give up too much from what you could have gotten at one point. So it's a tough pill to swallow, knowing that you might get less for your building if it's an investment sale. But on the flip side, rents have gone up a lot too, so the total sale price probably won't be too much different.
Yeah, at the end of the day, it'll be probably around the same, but the return's going to be a little bit lower. It depends on what's your level of risk tolerance at the end of the day if you're a buyer. So something to watch out for.
Exactly.
I guess for deal stories, one thing we did want to cover was a recent industrial flex condo that we actually repped a user buyer on. And this gentleman was in the aviation parts business, I should say. And it was a long process, probably about 1.5 years or 2 years just to find this guy building. And we got beat up during COVID and also post-COVID, going under contract, falling out, losing bids, and actually ended up getting him this unreal industrial condo. And I say that mainly because it's got specs that is pretty unusual for product in that size and price range. So it had 25-foot clear height, which is pretty unusual for a building that's about 5,000 square feet, a fully functional mezzanine and office. It had a shower, a shared truck well, a secured yard, pretty much everything that you would want. And it made a lot of sense for him at the end of the day. And it was actually a successful transaction. We ended up pairing up with an SBA lender that was super helpful through the entire process. And we got it across the finish line in about 60 days.
Yeah, that was a really nice condo. I think it was built in 2007, right?
Yeah, 2007, brand new construction down in Chandler. Has really good freeway access as well. So pretty much all the bells and whistles. If you were a user, I mean, that's a great place to call home for your business at the end of the day. But yeah.
That explains why it was so competitive too.
Yeah.
Multiple buyers competing.
Yeah. So. Cool. Next thing we're, I guess, going to go over is some recent trades. Do you want to go over what we saw in Pinal County and then also down off of Broadway?
Yeah, so one of the buildings that I saw come across was 2318 South Industrial Park Ave. It's just under 15,000 square feet, built in 67, a little bit of an older building. I know most of the buildings in this submarket are 80s build. But this one traded at $3.15 million. It was 100% leased at the time of sale and was general industrial district zoning, which we see pretty frequently here in Tempe, and had a clear height of 11 feet, a little bit lower than what we typically see with one grade level door. So overall, really good price considering the age of the building, but...
Okay. So we've got a trade that actually recently happened off 15th Avenue up in Deer Valley. This one was about 110,000 square feet, sold for 202 a square foot for about $22 million. And this portfolio of buildings was actually built in 2000. This is up by TSMC, so Deer Valley is getting a lot of traction, hence the higher price per square foot. It's got a 2-story office component, multiple grade level doors, no yard space, which is actually interesting, and it was actually 98% leased at the time of sale. Landon's got the next one, which I think was actually the biggest deal I've seen this year for industrial.
Yeah, I think you're right. It was the biggest deal they came across. So this one was over on Air Park Logistics Center. It's the Goodyear industrial portfolio. Just under 1.5 million square feet, large portfolio, traded for $184 million, $127 a square foot. It was 3 buildings in total that were just built this year, actually in 2023. Has direct taxiway access to the Goodyear airport. 40-foot clear height, zoned I-1, and has ESFR sprinklers. Really nice portfolio overall. And it was cool to see the largest deal come across.
Yeah, definitely interesting. And obviously, as we're seeing headlines sway that investment activity has slowed down, it's good to see that there's still a lot of institutional capital still picking Phoenix for their investments as well. That kind of covers it for the monthly update. If you guys have any questions, feel free to reach out. Thank you so much for watching. Again, Landon McKernan, Mark Cassell. We'll see you next time.